Well, good afternoon, everybody. It is Sunday, February 8th. It's a beautiful day here in Miami. Markets are a little bit better. Super Bowl is going to start in an hour. And I thought I would take the time today to explain a little bit about the controversy surrounding, quote, paper Bitcoin. Now, it's important to understand that the people who are talking about paper Bitcoin, what I am reacting to, there have been a number of posts from a bunch of very high profile accounts claiming that derivatives, ETFs, futures, perpetual swaps, etc., have created a have eliminated the cap of supply of Bitcoin, basically expanding the supply, meaning more people can sell, meaning you can suppress the price. Now, this narrative has a historical analog, and it's an important one that I followed for basically close to 30 years. It starts from a group called GATA, G-A-T-A, which has been talking about manipulation in the gold market for a very long time. Now, in the decade of we won't go back to the 1990s, but let's talk about the 2000s. They talked about very high paper to physical ratios, things like 70, as many as 300 to 1 on the futures exchanges, which allowed for aggressive shorting. And often deliveries that might have been requested somehow got unrequested, et cetera, meaning that there was a lot of games that were being played. There were arguments that the CME helped out banks. Okay, don't know if it's true. There were arguments about inventory issues in terms of the ETFs. All of this stuff came to a head and they made certain charges. They also point to manipulation charges, Barclays, JP Morgan, et cetera, paying very large fines for manipulating the price of gold. And so they look at this as a reason why the gold price was much lower than it otherwise would have been for a long time. And I asked Grok about this. And interestingly, after going through all the evidence, Grok says that their claims of manipulation probably have somewhere between a 20 to 40% probability of being accurate. So still probably not true, but a lot of people believe it. There's a lot of smoke, which means chances are there was something going on, even if it wasn't wholesale price manipulation, maybe not for decades, but certainly at periods of time. That is the backdrop that a lot of these paper Bitcoin arguments are looking at. But it is all. But before I finish on gold, let's talk about why gold has rocketed this year and what are the changes. And that is extremely instructive in terms of what could go on with Bitcoin. So there were two changes. And once again, I asked Croc to tell me if my supposition was correct, and it effectively agreed. The two things are non G7 central bank buying. So central banks outside of the club, outside of the cartel, outside of whatever you want to call it, buying physical gold, forcing delivery. Very big deal. Now, that's happening in gold in China. It's happening in silver in spades in China. And it's not just China, it's also Poland and a bunch of other countries. That creates a demand that just can't be shorted away. It can't be ignored because they needed physical. So no amount of paper shorting was going to hurt that. But the second one is equally important, and that is the contract for differences market. This is a market that used to be used almost exclusively for foreign exchange. And so it grew up with huge amounts of leverages available. It became very, very popular over the last couple of years, enormous flows, rivaling the CME's flows on precious metals. And that is making it very hard for the CME to immediately be the only one that's creating price. In fact, the very first time the CME raised margin requirements, they raised it from when it hit about 80. It knocked the price of silver down, and it was more obvious on silver, down to 70. And then, of course, silver took off and rocketed from these CFD markets. Then the U.S. got together with its allies, had a concerted effort to talk about silver strategic metal, and so it came back down. But even there, it's still back over, approaching that 80 level, even, and it's been bouncing between the mid 70s and the mid 80s for the last couple of days. That's silver. Gold has been bouncing around very close to the 5,000 level. So any of this, quote, manipulation or paper Bitcoin trying to keep it down just doesn't work as well. I mean, paper gold keeping it down just doesn't work as well anymore. So let's look over at Bitcoin. Why do I say it's different? Well, I say it's different for a couple of reasons, but most notably this. The gold price for decades was considered to be set by the futures markets. So the futures markets determine the price, and dealers in the gold world would basically price spot off of futures. That means that if you can short an infinite amount of futures in the vehicle that's setting the price, you can have an effect on price. But Bitcoin doesn't work that way. In the Bitcoin market, futures and perpetual swaps and other swaps are priced off the liquid, transparent spot market. That does not exist in gold. That's very important. So what that means is any long sustained price manipulation is impossible out of the futures markets, because the spot market, which takes a lot less spot to move price because it's, quote, less liquid, still quite liquid, just less liquid than the futures and the perp markets, can actually dwarf that. Now, this creates a separate problem, one which I've described before, which is it sets up for liquidity arbitrage, the thing where people buy long positions in a crypto and sell futures or perps against it to have a hedge position, and then dump the spot all at once, causing the markets to collapse and then buying the perps back much lower. Arguably, that is what happened at scale to trigger the 1010 debacle. Picking a very bad time to do so, having other things that created it, but I've talked about that, in other videos, so I'm not going to go there now. But it does create an issue. It's not like it's perfect. So that's why I say that paper Bitcoin is not suppressing the price of Bitcoin. But there's been a lot of talk recently about how the derivative markets accelerated the sell-off a couple of days ago, and that actually does make an enormous amount of sense. In other talks I've given, in other spaces I've described, the fact that selling options does two things. When you sell calls, it tends to put a cap on the price and make a top of a range. When you sell puts, it does the same thing for the bottom of the range until the range breaks. And if the range breaks, those puts, or those calls, in this case puts, that get sold, create enormous pressure on the dealers that hedge them to actually sell more, or if we were on calls, to buy more. We call that a gamma squeeze. And it's very clear that that's what happened on the 5th. Now, Jeff Park, in an article, did a really good job of explaining where this comes from and how. And he talked about how that impacted IBIT and the IBIT options, and that created a significant feedback loop. He also explains that the likely trigger, the likely spark, match, whatever you call that, lit the fire, was enormous correlation between software firms, which had a really bad day on the 5th, and IBIT. And that correlation caused multi-strat hedge funds to have to dump because they had to delever. And when they start delevering and it went past the option prices, then the gamma squeeze happens and it takes off to the downside. That's effectively a large part of what we saw and why it looked like a capitulation bottom. Whether it was or not, I don't know, although I tend to think that it was. So that, in essence, is something true. So if you want to take away one thing from this Sunday afternoon video, take it this: paper Bitcoin is not something that's going to be a long-term impact on the Bitcoin price, but the existence of such robust derivative markets and the existence of so much Wall Street participation will inevitably make, when volatility happens, be much more volatile. It will accentuate the big moves. So net, in the long run, what happens is the amount of volatility, the number of days with huge moves, probably goes down, but the size of those moves will probably go up. And note, this is true on both the upside and the downside. So with that in mind, hopefully this has provided some color and some commentary to people. There's one last thing I want to say. When people say, like me, talk about paper Bitcoin is not really suppressing the price, that does not mean that you shouldn't think about self-custody of your coins. It does not mean that every exchange who claims to hold Bitcoin on your behalf holds it. It does not mean you shouldn't seek out insured exchanges, qualified custodians, or self-custody. Because at the end of the day, when exchanges account for your Bitcoin, they do so on their own ledger, not on the Bitcoin ledger. So there is a difference. That doesn't mean that they're breaking the law to sell what they don't have. And certainly that's not true with ETFs, but it does mean that there is a difference. So understand that nuance here. That's important too. Okay, that's enough for a Sunday. We'll be back with another video tomorrow afternoon. Tomorrow morning is Macro Monday. I will see you all at 9 a.m. on the Wolf of Wall Street's channel.